It's Wednesday, May 22nd, 2024. Thank you so much for joining me today. It's a little breezy. Hopefully it's not disrupting the audio too bad. I do apologize if it is. Please make sure to like, share, and subscribe. Please keep sharing these videos all over your social media. Without further ado, on this beautiful, sunny, 95-degree day in Palm Desert, California, let's get into what is going on. Real quick, NVIDIA. Revenue up 262% year over year. Their stock, I believe, broke $1,000. So hopefully that's going to save the entire U.S. economy. Hopefully that will keep the stock market propped up for a while longer. Hopefully it's helping you. Hopefully it's pushing prices down at the grocery store, the gas pump, and inflation with goods and services. It's not going to change my life one bit. And it's also going to support the Fed in not cutting rates. Markets will be hitting all-time highs again. And as they do, the Fed is going to have a very, very difficult time cutting interest rates. And I was watching a show yesterday, just to change gears here a little bit, as the stock market was down today across the board, but you can bet they're going to be breaking all-time highs again and telling you and I everything is okay. But the reality of it is things like this. I was watching a Saks Realty last night. Very, very good YouTube channel. Many of you probably watch it, Saks Realty. Very, very good show. And, you know, they were talking about the amount of people in America. How many Americans have $1,000 saved up for an emergency? 56% of U.S. adults do not have $1,000 for an emergency. 56% of this country does not have $1,000 saved up for an emergency. Nearly 50% of Americans don't have $500. 36% of Americans have less than $100. Now, they had a guest on yesterday. I believe the show was from yesterday. It was a day, maybe it's a day or two old. I believe it was from yesterday. The guest said that he had to have an emergency root canal. Got infected, and it cost $3,000. How many people today in America, if they needed to have an emergency root canal that cost $3,000, would be able to do it? Most would not, unless they had the ability to put it on a credit card with the rest of their debt at 23+%. Think about where we're at. Tomorrow morning, all we're going to hear is about NVIDIA and, you know, basically 7 tech companies keeping all this propped up. We're going to hear how great everything is because NVIDIA is up 262%, while the average American, if they needed an emergency root canal, they're in very, very big trouble. While 56% of U.S. adults don't even have $1,000 saved up for an emergency. And emergencies are most of the time now over $1,000. $3,000 if you need an emergency root canal. Target shares tumble 10% as consumers buy fewer groceries and home goods. This on CNBC today. Fiscal quarter savings missed estimates as its sales fell about 3% year over year. The retailer saw consumers buy fewer everyday items like groceries and paper towels. People are buying less discretionary goods such as apparel and home decor. Reality is setting in, ladies and gentlemen. Think about over the past year, we saw people spending and prices of retail goods going up. People forced to spend more, get less, and they were doing it with the help of credit cards and buy now, pay later plans. Now the credit cards are getting maxed out. People are running out of time. They're running out of credit cards. And when this happens, it's going to get really, really bad. Homelessness continues to explode. You and I are going to know people who are facing it, if not already facing the nightmare of possibly being homeless. 2 years ago, when I would talk about this, people would laugh. Nobody's laughing now. This is reality. We've come a long way in 2 years, haven't we? And it's not going to get any better anytime soon. Here's one from Fox Business. DoubleLine Capital CEO, the bond king, Jeffrey Gundlach, warns over U.S. economy as Americans' debt piles up. Very concerning. Credit card bills are starting to add up for Americans, Gundlach says. This is going to be a big problem. You know, people had the stimulus. They were told not to work. They stayed home. They had fun. They had a lot of money that they spent all of it. And now, unfortunately, here we are in 2024, and time is running out for many Americans as now they've lost their jobs, credit card rates at 23+%, inflation skyrocketing, it's exploding, and they're having a very, very difficult time now with no money in savings. Unfortunately, Americans are still feeling the impact of higher prices and offsetting the sting with credit cards, Gunluck says. He says the bills are adding up. He predicts a recession is inevitable. I think, honestly, I'm not an economist, I'm just a guy with a microphone and a camera here, and I say right now we're in a depression. How many of you agree? Do you think we're in a depression right now, recession, or everything's fine? Let me know your thoughts. Comment down below. Love the comments. But do you think we're in a recession now, a depression, or the economy's fine? The hedge, cracks in the armor of the resilient consumer. Now remember, 70% of U.S. GDP is based on U.S. consumption, people buying things with money they don't have. If the consumer falters, so does the U.S. economy, and we're beginning to see it crack. Consumers have run out of money. Their savings accounts are zero. They're tapping out on the credit cards that have broken $1 trillion. I think we're at $1.13 trillion of credit card debt. The consumer, ladies and gentlemen, is extremely vulnerable at this point. And this is while they're working 2 to 3 jobs and barely making ends meet, keeping their heads above water. They are extremely vulnerable. We're seeing an increase in 401k withdrawals and loans against the 401k. More cracks are showing in the consumer. What was it? Like 43% of people with buy now, pay later plans are behind. We're seeing historic number of people behind on their credit card payments, their car payments, 25 to 30,000 car repos a day, and those credit cards at 23+%. How long is this going to be able to continue before it does not? People are just making the minimums, and now they're falling behind on that. People are getting later and later, more and more delinquent on the credit cards. And guess what? When you're too late on those credit card payments, they shut your credit cards off. And we're going to see more people see those credit lines cut in half, and more credit cards are going to be shut off, and more credit cards are already maxed out. Big trouble. Here's one from CNBC. Federal Reserve minutes indicate worries over lack of progress on inflation. The Federal Reserve officials grew more concerned at their most recent meeting about inflation, with members indicating that they lacked the confidence to move forward on interest rate reductions. Another reason why markets were down today. Everything down. Gold and silver way down today, as we're nowhere near the 2%, and the Fed officials telling us that, hey, I think we're going to be higher for longer. Now they're telling us that there's going to be no rate hike, at least not right now, at least in the foreseeable future. But do you believe anything they say now? They told us that inflation was transitory, but it wasn't. They're telling us that, hey, don't worry, there's not going to be any rate hikes, just higher for longer. They could raise rates this year because they might have to. They could raise next year because they might have to. You can't believe anything the Fed is saying at this point. But they're trying to cool everything down and not alarm the markets too much. Markets were in the red today. Gold and silver down because the markets, or excuse me, the Fed officials coming out and saying that we're going to be higher for longer. Gold and silver didn't like that. Markets didn't like that. But at the end of the day, it's a great opportunity to maybe jump in and buy some of this stuff. But I could pretty much guarantee, I don't have a crystal ball, but I could pretty much guarantee that inflation is not going away anytime soon, and we're not going near 2% anytime soon. So gold and silver, the gold and silver markets will figure this out, that, hey, we're going to be higher for longer, but guess what? So is inflation. Dollar's going to be under extreme pressure, and I expect to see in the very near future, gold and silver to start ticking right back up. But hey, take advantage of the dips, right? Hedge today. Hawkish FOMC minutes show various members willing to tighten more. Fear financial conditions too easy. This is what we were just talking about. As I said, they're saying rate hikes are off the table. I would not believe that. The Fed still expects growth without inflation. How many of you believe that? I do not believe that one bit. In fact, the Fed has been so wrong. They're going to continue to be wrong. They have never prevented a depression or a recession, and they are in very, very big trouble because they're going to be damned if they do, damned if they don't. If they raise, they don't raise. We're going to see big trouble. Home sales slipped unexpectedly in April despite big gains in supply. This on CNBC. Inventory of existing homes rose 9% in April and up 16% from last year. Just like the auto market, we're going to be told you better hurry up and buy. You're not going to be able to get a car. The car lots are empty. They're going to be empty forever. You better hurry up and jump in with all the FOMO. Now, existing home inventory is rising up 16% from a year ago, and it's going to rise a lot more. Home sales fell 1.9% in April from March. Sales, get this, of homes below 100,000. I don't know where you could get one of those, but I guess they are out there. They fell 7.1% year over year, while sales of homes over $1 million jumped 40%. So there's that wealth gap, ladies and gentlemen. The people that can afford to buy a house over $1 million, they're still buying. People who can afford a $100,000 home, those fell 7.1% year over year. But even if you bought a home at $1 million, there are people doing it, and they're earning maybe a household income of 150,000, maybe 200,000 or less. This is why this is going to be big trouble in the housing market, because you do have households making under $200,000 buying $1 million homes. So that's 5 times your income. That is not sustainable. And you have a lot of people, households in Orange County making $150,000 buying a home at $1 million. Not sustainable. So people are doing it, but they're really jeopardizing their financial security. They're really putting themselves in a very, very vulnerable position, because if you need an emergency root canal and it costs $3,000, and half of your income is going to a mortgage payment, while your car insurance is rising, your health insurance is rising, your property insurance is rising, you don't really have anything left. You're not saving anything. And so this, again, very, very scary, very dangerous, and people are very vulnerable who are doing this. But this is happening all day long. People who should not be allowed to buy these homes are buying these homes. And they are one little accident away from very, very big trouble. So you may live in $1 million home, but that doesn't mean you can afford that $1 million home. And you're one little accident away from falling behind on that $1 million home. Weekly mortgage refinance demand revives as interest rates fall to 7-week low. Applicants to refi a home loan rose 7% for the week, and we're up 21% year over year. To refi a 30-year is 7.04% according to bankrate.com. So, if you can't get a equity line, a home equity line of credit, a home equity loan, you might be desperate enough to refi your property at over 7%. There's no doubt that people are consolidating debt, and as consumers have record debt, they're adding more record debt. People are going to go deeper and deeper into debt to try and, stay in that middle class, to keep the cars, to keep the lifestyle. So they're going to go deeper into debt. I think the only people refining right now are very, very desperate people trying to hang on, and they're going to go deeper into debt by doing this. And this, to me, is a very, very alarming sign right here. Again, if you can't qualify for a HELOC, they're more than happy to refi your home at over 7%. They're licking their chops to do it. I remember 2008 very, very well, And I'll tell you, people who are using their homes as ATMs, people who are going deeper into debt to hang on to the lifestyle, these people better be very, very careful. Very, very careful. Most Americans falsely think the U.S. is in recession. Polls show this on CNBC today. According to a new Guardian-Harris poll, 56% of the people that were polled said that they believe that the U.S. is in recession. But according to the article, GDP grew by 1.6% in the first quarter. And you can thank that to all the government spending, sending hundreds of billions of dollars overseas, propping up this GDP. And you know, you got to think all these numbers that we're getting, all this data that we're getting, it's so manipulated, it's so fake. All you have to do is go to the grocery store, go to the gas pump, go to a Lowe's, go to a Home Depot, call up your air conditioning repairman, call up your handyman, and see how much more it costs now than it did a year ago, 3 years ago, 5 years ago, and you get what I'm saying. They can tell us that most Americans are wrong, but most Americans are right, because they go out, they shop every day, they buy food, they buy gas, they're looking at their savings accounts, they're looking at their checking account, and they're looking at the savings rate. They're barely saving anything after they pay all the bills and Uncle Sam. There's nothing left. What's the savings rate down to now? 3.2% and falling. As we're going to have our taxes raised, as we're going to send more money to other countries, as our health insurance goes up, property insurance is going up, everything is going up. All of this extremely inflationary, ladies and gentlemen. And think about the strategic petroleum reserves, the reserves in the Northeast that we just took out, sold 1 million barrels of. This is all extremely inflationary. None of this is going to help the economy. You and I are going to continue to pay for this. And I believe today the administration is going to let even more people not have to pay their college tuition debt. Who's going to pay for it? You and me. You and me are going to pay the college tuition debt. I believe another $7.7 billion was forgiven today. That's going to put the total near $200 billion of college tuition debt forgiven that you and I are on the hook for. How is this not inflationary? Everything we're watching take place in this economy is extremely inflationary. There's no way we're going back to 2%. The consumer is going to continue to be annihilated. The middle class will continue to be annihilated. Protect yourself the best that you can, ladies and gentlemen. I don't have all the answers here, but we all got to be thinking about how we protect ourselves financially because it's going to get worse. You've got to protect your wealth. You've got to make wealth. You may have to work more. You may have to work harder, but there's only so many hours you can work in a week. That's the problem. There's only so many jobs the average American can work. People are working 2 to 3 now. Some are working 4. How much more can people do? And they're saving less money. Inflation is going to get nasty. I don't have all the answers here. This is why I've been preparing for years, and I'm glad I did. While most people were out, you know, spending, taking vacations, going to sporting events, and blowing their money. And unfortunately, I know people will probably be knocking at my door one day for help. Don't come to my house. You won't be getting any. You'll just see 2 big dogs and a group of people that are not going to let you in. So this goes to all my relatives, family members. You've all been warned. Take care of yourselves. Get your ducks in a row. Get your preparations in order right now. Get your house in order right now. Inflation is going to get much worse. They are in big trouble. And if they're in trouble, that means we're in even bigger trouble. So pray for America, ladies and gentlemen, and take every day that you have to add to your preparations. Because if you think we're out of the woods here, if you think things are getting better because NVIDIA is at all-time highs and broke $1,000, you're crazy. That's great. That's wonderful. If you own some, wonderful. Most people, it's not going to help one bit. Most people are in big trouble. They don't even know how they're going to put food on their table tonight. They don't know how they're going to feed their kids tonight. They don't know how they're going to put gas in their car to get to work tomorrow. Go to the gas station, see what people are spending, $5, $10, $15. That's what they're spending at the gas station. They can't even afford to fill up their cars at this point. This thing is getting really scary. Stay safe. walk close to God and do whatever you can to continue to prepare. I know most of you are. But again, I've never seen anything like this. I don't have the answers, but I hope that all of us are thinking outside of the box and figuring out a way to get through this. Stay safe.